All righty, top of the morning to you guys. Um, this week, we're gonna focus on psychology. Okay, um, trading psychology is one of the major factors, major determining factors of whether or not you can be a successful trader. And a lot of times, it's going to boil down to your mindset. Whether or not you make money on a trade setup. So you can identify the trade setup. You can have the perfect entry, but you can have bad psychology and either exit the trade too fast or decide not to enter the trade because your psychology is tore up. Okay. There also can be instances that arise that will cause you not to take trades. Maybe you've taken 2 or 3 losses in a row and you decide, hey man, I'm not going to take the next trade because I've only lost, I've lost these trades in a row. So as a trader, it's important that you understand trading psychology. And it's funny that somebody hit me up. I think Dez hit me up this week about trading psychology. And I do a lot of one-on-ones with people throughout the week, and I think that psychology is probably the number one issue for a lot of the people that I meet with. They have bad psychology for various reasons. Maybe in the past their trading didn't work out, or they suffer from information overload that gives them bad psychology. But whatever the case, the psychology is not there for a lot of people. And the second problem they have is discipline, right? You have to be a disciplined trader, take your setups every time, win, lose, or draw. Exit the trade every time, win, lose, or draw. When you hit your TPs, take your partials every time, win, lose, or draw. So all of those things are going to factor into your success as a trader. The video I have today, it's about an hour long. Maybe I'll shave it down a little bit, but you guys will have the reference where you can go back and watch the video in its entirety. It's basically a breakup. There's this podcast that I watch, and every now and then they have different people that come on the podcast and talk about psychology. So this is going to be a snippet from several of those different podcasts and of people talking about trading psychology. And I chose this video because it's basically the guy went through and took what he considers as the gems from the various videos. Okay. So while I find this video, let me send out this. Thank you. I think I saw Will Ross. Hey, Will, I appreciate you and what you're doing with your call on the indices, man.
Oh, no problem, boss. No problem, man. I appreciate you as well, man. Just trying to help out, man.
Oh yeah, that's what we need, man. If you have something that works, share. I really appreciate that, and please continue. Please continue. All right, without further ado, I'm gonna hit play on this video and we'll get started.
Markets, speculation, and risk. This is the Chat with Traders podcast, hosted by Aaron Fifield.
Hi traders, and welcome to episode 199. This here is another compilation episode. So just like the best of risk management episodes from a few months back, except this time I've compiled some of the best clips on trading psychology. Again, I dug up way too much from the back catalog of almost 200 episodes to pack into one episode. So this is only part one. A part two will follow shortly. Besides creating a go-to trading psychology resource, I hope this might also highlight some past episodes that you've not yet heard. So before each clip, you'll hear I mention the episode number in case you want to go back and listen to the full interview. Plus, all episodes can be easily located in the show notes at chatwithtraders.com /199. Now, to get things started, this first clip is a gem from the very early days of Chat with Traders. It's taken from episode 8, and it's Options Madman Anand Sanghvi, aka Lucci. Lucci has been on the podcast a couple times, and given some of the large P&L swings he experiences, it's always a treat to hear him talking psychology. What are some of your best tips to sort of keep a handle on your emotions? Do you have any sort of advice on the subject that you wish someone shared with you when you're starting out?
Yeah. And that's the thing, like you go through so many different emotional stages of your life, so you got to remember, like whatever environment that you have around you, that's what's going to influence your decisions, and that's what's going to influence your emotions. So for example, when I was 23, 24, I just had a baby. My thing was all about, how do I make sure I got rent and all that kind of stuff covered every single day. So when I went about trading, it was all about, okay, how do I make 4,000 a month? How do I make 4,000 a month? How do I make this kind of money a month? And I wasn't looking at the big picture. I was never looking at the big picture, simply because like what my environment decided how I was going to live, how I was going to make decisions. So whatever you're going through at the time, you always have to be bigger than that. You always have to take a step outside and look at what you're going through and realize that in trading, none of that shit matters. None of it matters. And it's so difficult to do this. To step away from having to make money, to step away from, living a certain lifestyle or requiring a certain lifestyle. It's so difficult to step away from all this stuff. And I would say the one most important thing that I wish somebody told me was that to not think about the money when I'm trading, and again, this is not something that you learn overnight, but it's something that if you have it in the back of your head when you're starting, you're closer to the bigger picture than I was, so it took me years to figure that out, and it was always about your lifestyle. Like trading can consume you and does consume a lot of people to the point where they don't leave their houses, they don't go out, they don't talk to people. They become very secluded and lonely and loners, simply because like they're slaves to their P&L every single freaking day, and that's all it's about. And that's not what it's about, so living a healthy lifestyle and enjoying time with friends, whether you're down on your account or down on the year or you're up or whatever, having a life is so important to being on an even keel, when you're sitting there in front of the computer, in front of the trading screen, so always thinking about that big picture, which again, most people stop thinking about it the second they have problems trading or the second they have problems in their environment that they have to deal with. And then subsequently, those problems affect their trading decisions. And that's all it is. Most of the bad decisions that you make are a direct result of your environment, or you projecting the problems that you're having in your environment or in your life onto a market which doesn't give a shit about it. We're just talking pure probabilities. Market doesn't care if you got issues, it doesn't give a damn. But you're going to project that onto the market simply because that's what's going on in your life. That's what you're thinking about. You're thinking about rent. You're thinking about this. You're thinking about, how shitty your life is maybe at that time, or how great your life is at that time. You're thinking about all those things, and you're projecting this onto a probability mechanism, a market which doesn't give a shit. So that's the biggest thing I could say. Keep thinking about the big picture. Don't fall into the day-to-day, hustle and bustle of the market all the time. Realize that the market's not going anywhere. There's going to be money to make tomorrow, the next day, the day after that. So don't get too wrapped up in every tick of the markets.
Still tying in with that emotions and psychology sort of thing. How do you keep the confidence up to push on and pull the trigger after a run of losing trades?
This one's tough, man. It's tough. It's like taking a bad beat. It's always like taking a bad beat. It takes time. Everything is about time. So let's say you get a run of bad cards, or you get a couple shitty months where you take a bunch of losses. It just takes time. It takes time for you to step back and realize what happened, and then it takes time for you to stop being depressed. Like humans have this innate sort of ability to what is the word I'm thinking of, self-doubt, or to beat themselves up, you know, after something bad happens. Like humans always go through a period of time where they beat themselves up about it. They're like, dude, I shouldn't have done this, I shouldn't have done this, I shouldn't have done this, right? They kick themselves in their ass too hard, and it takes a while to work out of that process and to start feeling more confident about yourself, to start feeling, you know, like you actually can do this. You know what I mean? I mean, you know, during a period of bad losers, you know, there's nothing in the world that feels as bad. I mean, again, obviously there's worse situations everywhere, but you know, it's a horrible feeling in the pit of your stomach. You're just like, dude, can I even do this anymore? And it takes time. It always takes time to come back out of that scenario. And that's, again, why it's so important to stay on that even keel, to continue to live your life and enjoy your life, and to continue to have other things around you that you're motivated by as well. It can't just be about the markets all the time, you know? So that will help those, you know, those periods of self-doubt and, you know, you're beating yourself up, depression and all that kind of stuff. You know, that will help making those periods a lot smaller. So you can, you know, automatically bounce back and jump back into the game. You know, for me, it's like 2 months or 3 months where I sort of like size down. I'm like quiet, you know, and then finally, once I get a couple of winners, I'm ready to get back in there.
Next up, Jared Tendler from episode 86. Jared is a mental game coach who works with world champion poker players, professional golfers and pool players, and traders too, with the aim to reduce negative and excessive emotion from decision making. And I understand that one issue that affects traders or poker players of all levels is something you refer to as tilt. Would you mind sort of describing what is tilt and how to recognize when you're actually, as you call it, on tilt?
Sure. So tilt, there's kind of a couple definitions for it. One was the definition that was there before I came into poker, which was tilt was pretty much any reason for you to play suboptimally, right? So you're making decisions that are less than what you would consider to be your best. And so upon studying, you know, poker players and their descriptions of tilt, you know, for several years, I really realized that, you know, 80+% of their descriptions tended to be about them getting angry and making bad decisions. And so for me, tilt is just another word for saying anger. For a lot of poker players, they'll say, you know, tilt is anything, as I said, less than playing your best. But what if you're drunk? You know, what if you're tired? What if you're fearful? You know, all of those reasons are going to need unique solutions to them. So, you know, anger is really the biggest one. In trading, I would call the equivalent greed and fear, and maybe to a lesser degree, you know, loss of discipline. They tend to be the words that traders use most often to describe their mental game issues, when I don't think that they're actually experiencing greed nor fear or a lack of discipline, that it's something more than that. But within poker, what I did was break down 7 different types of tilt, or 7 different types of anger that would exist. One was running bad tilt, which meant, you know, players were losing for several days in a row, sometimes weeks or months, and they were, you know, just getting crazed as a result of it. And the solution to running bad tilt has to do with the understanding that emotion accumulates over time. Okay, the brain has a mechanism by which it can, in essence, digest emotion. Right. So you have a stressful day, you got angry one day, and so, you know, you go to bed not in the greatest of moods, but you wake up the next morning, you feel fine. Right. Nothing bothering you. You feel it's like a normal day. Well, where did the emotion go? Right. In essence, the brain has like a stomach that digests the emotion, much like it would the actual stomach digests food. But what happens is when there's like a really emotional day, you know, or then you know, you might go to bed and your sleep might even be disrupted, in part because your brain is digesting all that. And then when you wake up the next morning, you know, you don't feel quite right. It's almost like an emotional hangover, so to speak. And so when you start that trading day, or the poker players, you know, goes down and sits to play poker again, you know, they're not starting with like an empty cup in a sense, right? Their tilt threshold, their threshold by which the anger is going to affect their decision making, has been lowered, right? Or their emotional level has already risen, however you want to think about it. And so in essence, it's going to take less tilt-inducing stuff to get them pissed off to the point where they're going to make bad decisions. So dealing with that accumulated emotion becomes really, really important. And so for traders who have this particular issue, one of the best ways that you can start to break apart that accumulated emotion is to do some journaling, is to write. And the writing, the purpose of it, first and foremost, is to get out of your head what those emotions are, right? You go have a couple beers at the end of the day, right? You're going to feel better, right? But are you going to actually get rid of the emotion? Probably not, right? So venting to other people, has a way of getting the emotion out, but it's also not as productive. So keeping things inside is not a great thing. When you vent on paper, what you do is you give yourself a record of the emotional reactions that are occurring. And that becomes helpful when you go back and look at it a day or two later and you see, like, what the hell is going on here? Why am I getting so pissed off? And that's an important question to ask, regardless of the mental game issue that you're dealing with. In particular, we're talking about tilt. Why is it that I'm getting so pissed off here? Is it because I just can't deal with losing this many days in a row? And so then you're able to start to solve things. But at a minimum, you can start to deal with running bad by just getting that emotion out and minimize the accumulation day by day so that you can give yourself a chance to kind of reset. The next type of tilt I talk about is called hate losing tilt. I should have actually called it competitive tilt in retrospect, because like traders, poker players, you're going to lose a lot, right? And for people who are competitive, especially those who are athletes or were in any kind of forms of competition earlier in their life, they have more control in those other avenues. They've been more successful. And so they have more control over winning and losing. So not only do they hate losing, but now they've entered a profession where losing is built into the fabric of it, and it just pisses them off. There's no way around it, right? There's a lot of competition. Well, what you have to do there is have to really start to understand exactly what it is that you're competing for. And that's how you can start to correct it and reframe the nature of the competition, right? And so, you can look at your goals as being something that you're competing for. Sometimes confidence or good feelings, emotions, you're competing for. And when you start to understand exactly what the nature of the competition is, you can start to round out some of the edges that will create those problems. Injustice tilt, entitlement tilt are two ones that I've mentioned already today. Mistake tilt, revenge tilt. Kind of always a fun one. In poker, that would be a particular player is just constantly beating you, or they say something or do something that kind of just annoys you, and then they beat you, or a particular player who has just gotten the best of you, time after time after time, and they, now just hearing that person's name gets you pissed off. As I mentioned, right, trading is a little bit less personalized than poker is, but revenge trading definitely exists, in a way of trying to get the market back for screwing you, right? So maybe less about a person and more about getting the entire market back. And then the last one is called desperation tilt. And this is where I would say there's a line drawn between a performance issue, right, versus an actual gambling problem. And this is a very important distinction to make for some traders and poker players to make, right? A performance issue means that what you're doing, and actually, let me describe first. So desperation tilt basically means that when you are so desperate to recapture your losses that you'll pretty much do anything, right? You're going to increase your bet sizing. You're going to enter trades that you're going to start placing bets in industries or in names that you don't even know anything about, right? It becomes more pure gambling in a sense. That desperation to win overrides all logic, and you do a lot of stupid shit that you're regretful of, the next day or even later in that day. When it's a performance issue, you can handle those losses. You can handle all the dumb stuff you've done. When it's a gambling issue, now you're betting with life savings. Now you're betting with money that you borrowed from friends. Now your life is becoming impaired, and that's where you've got to really look in the mirror and say, do I actually have skill in this game, or am I just a degenerate gambler? And fortunately, most of my clients have been in the former category where it's a performance issue and we are able to correct it. But if somebody has, a gambling problem, like I mentioned, I refer them to somebody locally because it's not something that I work on.
Now, I'd like to share with you what I think is a pretty fascinating segment from Michael Samuels on episode 165. Michael's an equities guy with a prop trading background who now predominantly trades news flow around mergers and acquisitions and other major events. Can you tell us a little bit about this situation with Qualcomm? And I can't remember who the other company you mentioned was. You said this deal's kind of falling apart at the moment. I mean, how are you trading around that?
One of the mistakes that I've made is I'll call it the cost of time being sunk in, or time sunk cost. The more time that I put into something, and the more money I invest in it, the more research I do with it, the harder it is for me to change my mind on it, if that makes any sense. So the short story in this, again, this is 19 months. I'm going to try to sum up in 2 minutes. The short story is Qualcomm tried to buy this company, NXPI. They needed 9 different countries to approve this deal. 8 of the 9 countries agreed, and 1 country did not, and that was China. And what ended up happening was it got very wound up and wrapped up in all sorts of different international conflicts that are currently happening between the United States and China and Trump and and Chairman Xi. And I have found myself at points, head spinning over this thing, and I've gone to drastic measures to try and gain an edge in this. And the only result has been that it just made me crazy. And, if you want to, I can tell you about some of these drastic measures.
Sure. Yeah.
So, and again, you have to stay within the confines of legality, right? So there was a point in this story where the Wall Street Journal broke a story that said that Qualcomm executives were waiting for the 10-4 from China to fly over there and finalize the deal. So in my mind at that point, the signal that I wanted to see was the Qualcomm plane taking off from San Diego, California and going to China. And now there's various services that track these sort of private planes. But in this case, that wasn't possible. And the reason that wasn't possible was because Qualcomm themselves blocks the tail number on their plane. So the next thing the only other option you have then at this point is, and again, this was a story that I had made up in my head, was that the only way to track this plane is to physically be out there in San Diego and watch it take off. And so I literally just posted we have something called TaskRabbit. I don't know if you guys have that there, but
We've got something similar. Yeah.
Okay. So I posted something on TaskRabbit, and the TaskRabbit post read something like, go to this airport and watch this plane take off and send me a video of it. And I got a response in about 15 seconds. And this woman who was, just a mother of 3, she would drop her kids off at school and she would go to the airport, and she sat there at the airport for me day after day after day after day. And she was probably there for like a week. And I had to deal with her. And the deal was this: I'm going to pay you X, this much a day. And if you get a video of this plane taking off, I'll give you this bonus money, this big bonus money. And she calls me a week later and she says, it's happening. And, you're probably wondering, well, how did I know where the plane was going, right? That's the big question. They have this plane. How would I know? And the thing is, you don't. But the way that, and again, I was making a lot of this up, perhaps, Qualcomm has 2 planes. One is for short distances and one is for long distances. And so I was tracking the big one, and the big one took off, and she sent me a video of this. And of course, she sent me the video of this at like 3:45 on a Friday, where I have 15 minutes to make up my mind of what I want to do with this situation. And, that's the kind of stuff that can make you crazy. And because you think you have this piece of information that no one has, you think, well, what if it happens this weekend and I don't take advantage of it? So I had better do that now. And not only that, but I was so mentally wrapped up in this thing. I was so emotionally committed to it, like it was a person, this trade. that I wasn't thinking rationally. And of course, I ended up putting on a large position. The deal is still not happening, and it's probably taken a few years off my life just watching this situation unfold.
Right, man, that's a crazy story. Have you done things like that in the past? Like other situations where you've kind of done some, I don't know, stakeouts,
excessive due diligence?
Yeah, let's call it that.
Nothing to that extreme.
Okay.
Nothing to that extreme. I mean, a lot of this job, in my opinion, is, you could call it getting lucky, but you have to be on these conference calls. You have to be in the game. Don't be lazy. One of the best trades I ever had, I happened to be a bit lucky, but I happened to be on this Lumber Liquidators, which is sort of like a lumber supply company, conference call in 2014 or 2015. And they happened to mention in the call for, at complete random, that they were going to be on a show called 60 Minutes, which is an investigative journalism show that Sunday. And it was like, a grenade went off in the middle of this call. And one of the analysts, it's an earnings conference call. Suddenly no one cares about the earnings. And they said, well, what's the deal? Well, why are you going to be on 60 Minutes? And he said, well, I can't really describe, the contents of it, but I will say this. I stand by the safety of our wood, which implies, oh shit, well, the whole segment's going to be that the wood's not safe. And you probably had 5 to 6 minutes before this hit, the Bloomberg wires and all the major news wires. And, in trading, that's an eternity. 5 or 6 minutes is an eternity. And, I did great in it, but you look back and you say, well, man, I could have done this, or I could have done that. But I guess what I'm trying to say is one of the things to always remember is just don't sit on your hands, get in there, be on every call that you can get on, just be there.
So when you got that information, how did you actually build a trade around that? Did you just instantly go short the stock, or was there something more to it?
In that situation, and again, I've replayed this in my head, I should have done this or I should have done that. I mean, at that point, the stock was trading for 69. You could have shorted it all you wanted down to, let's say, there was unlimited amount of liquidity in this name till, 65. And at that point, I think it was still maybe down small on the day. And just so you know, on Monday after that segment, the stock opened at 30. So,
wow.
There's lots of things I could have done. I could have bought puts that were going to expire the following Friday and, before the vol and the puts had exploded. There was lots of things I could have done. What I did was just short the stock outright, because in the moment, when it's happening, you just think, what's the easiest way for me to get exposure?
This following clip was recorded at a live event which aired on episode 163 with the legend John Moulton, best known as Rambo, a nickname and reputation he earned while throwing around huge volume as a spread trader in the pits of the Sydney Futures Exchange. Let's go back to the point you made where you spoke about how it's important to lose. Sounds like you've got a few things you want to say about that. So let's hear it.
Well, it's just my observation the last couple of years of my life that a society in general doesn't really teach people how to lose. They teach you how to win. Winning's easy. Everybody knows how to win. They see LeBron James win a basketball game making the last shot. He knows how to win. He's a winner. Winning's easy. But is there anything in society that teaches you how to lose? Is there a course at university you take that says, hey, come take this course, we're going to teach you how to lose? There is one thing that will teach you how to lose, and that's organized sport. Because in organized sport, you will lose. Okay? That's the only thing I can think of that teaches you how to lose. Other than that, you have to figure it out for yourself. You really do. And losing and how you deal with losing is extremely important in trading. Because winning, I'm telling you, is easy. That's easy. It takes care of itself. The key to trading is learning and figuring out how to take a loss and how you deal with that up here. Do you hang on to it and let it bother you? Or do you release it and let it go? All I can say is that you need to learn from when you're trading, you have to learn. And you can learn from being correct and say, I did that correct. And you learn from that. You can also learn from when you lose. And when you lose, you have to experience the loss, feel it, learn from it, and spit it out and let it go. And focus on the next trade. If you hang on to a loss too long, it will pollute you. It will not allow you to make the next trade. And you have to focus always on the next trade. The next trade is the most important trade in the world. Not the last trade, or the trade before that, or the trade before that. Just let the trades happen and focus on the now of trading.
Do you have the belief that each trade is individual of itself? Like there might be times where you're actually going through a rough period. Do you still treat every
Why are
trade?
you so negative?
I'm not, but we're talking about losing here. Is,
no, that's true. I mean, the way I've always traded, I don't want to use the word high frequency because you guys have algorithms that are high frequency trading algorithms, and I'm more of a hands-on trader. And what I'm always doing is I'm focusing on the next trade. I don't think about the trade before it. And I'm not analyzing the risk I just took with that previous trade. It's just a fucking trade. I don't care. It's just put it in the books. Let's get on to the next trade. And because I'm mainly a spread trader, so I'm buying here, I'm selling here, I'm trading 20 different things all the time on the bid and offer, blah, blah, blah. A lot of times I have no idea what I'm doing. I'm just trying to make good trades. And then the market closes and I go, I wonder what my position is. Let's start to look at that position calculator. I look at the position and go, well, okay, I'll get that up on the chart. I'll get that up on the charts and see if that looks good. Oh yeah, it looks good on the charts. I like that position. I might keep that for a day or two. What motivates me to make trades is when I'm looking at the markets is a lot of different things. It has to do with relative value. It has to do, is there a buy program in the 10 years? Is there a sell program in the 10 years? Are these spreads reaching historical levels? Are we getting near expiration now? These spreads historically have a tendency to move a certain way going into expiration. So there's a lot I'm thinking about when I'm making trades, but I don't dwell on what I've done. I never dwell on what I've done, ever.
When you're talking about learning how to lose, I mean, I know who here has been trading, let's say, less than 2 years?
Who's been trading for more than 10? Ooh, cool, young crowd. That's cool.
So I imagine, especially for newer traders, that's a very strange concept to put forward. Yeah, learning how to lose. How do you actually know if you've learned how to lose?
You stop doing it. you don't lose as much and you lose less frequently. And then you say to yourself, maybe I'm getting this now. Okay. But you're going to lose. So I don't dwell. Once again, I'm repeating myself, but I'm so focused on the next trade. This is real Zen shit, man. This is like living in the now and spitting out what's happened in the past. If you're a Zen Buddhist, if any Zen Buddhist here, you'll make a fortune trading. So what you're trying to do here is you're trying to focus on the absolute moment of the price information that you're getting off the screen. And that's what you're focused on. And everything that's happened before that, you can look at it later, but in an active market, when you're trading, you want to be focused on the now of the price action that you're looking at. And if you're dwelling on other things that have happened in the past, it's gonna keep you from doing that. It's as simple as that. As far as losing is concerned, I mean, like when do you really actually realize that you've lost money? Well, it's when you get your statement the next day and you look at the total equity at the bottom and you say, fuck, I lost money yesterday. But I don't do that. I've gone months and months without looking at my statement to see if I made or lost any money. I've gone months with that. One of the things when I first started trading, like a lot of you guys are new traders, I had to keep track of how much money I was making on a daily basis. I used to go from Chicago, on the Chicago Northwestern trade up to Lake Forest every day. It's about a 45 to an hour train ride, depending whether I'm taking the express train or not. And I'd sit down, I'd count every trade I made and figure out exactly how much money I made or lost on the day. I did that for a few years, right? So it's an evolutionary thing. When I first started trading, I really wanted to see how I was doing on a daily basis, right? It was important to me. Then I realized after a period of time that it wasn't so important. Then I got to a point where I said, actually, if I can completely divorce myself from money, I'm going to be a much better trader. I know that's hard to do, but I'm telling you now, if you can get away from the money aspect of trading and just focus on the market and making good trades, You'll be distracted by less things. There you go. I mean, I'm at a point now, and I have been for about 15, 20 years, where I just don't care about the money. I get a monthly statement now. I'll look at a monthly chart of where my equity's been, and that's it. I don't look at daily statements. I look at nothing. I'm focused on my position and the trades I want to make, the trades I'm making.
What are some of the lessons? I know this is a really cliche sort of thing to say, but given someone like yourself who's been doing this for 40 years, I think it might be an interesting subject to go into. What are some of the lessons which you would like to pass on to a younger group of traders?
Believe in yourself. Self-belief. Real big. Real big. Don't quit and never lose all your money. It's like a poker game. You lose all your money, you have to leave the room. Go away. Come back when you have some more money. So, yeah, and that's just a very simplistic thing to say, but it's really true. Stay in the game and really believe in yourself. It's a real balancing act between having too big of an ego and not having enough of an ego, you know? And you got to know yourself really well. You got to know what your strengths are, and you have to know what your weaknesses are. And it's a real game of inner exploration up here. And I find it interesting now we're all trading from screens. The screen's over there, and I'm here. You want to externalize the experience of trading? Real easy. The screen's over there, and I'm here. But you shouldn't be doing that. You should be internalizing the experience of what you see on that screen into here, internalizing it. It's not you against the machine. The machine should be part of you, metaphorically. The one thing that I found and about trading, and it's the greatest gift that trading ever gave me, and it has nothing to do with money. It has to do with freedom up here. I knew early in my life I wasn't the type of person who was going to be told what to do. I realized I was going to have to find something that I could do for myself. I wasn't very good at taking orders or working for somebody. And initially, it was like, okay, to do that, I need to make some money on my own. I'll become a trader, okay? Down the track, and I made mistakes. I started, when I first got some money, I started buying stupid things. Then I realized that owning physical possessions was just going to be a burden to someone like myself. I'm no good. Can't look after things. I don't know how to change the oil. I can't do this. I can't do that. Owning physical possessions is a complete burden. So I stopped doing that. And then a little bit further down the track, I realized that the greatest thing that trading was going to do for me was freeing up my mind. Free me up here. I can look at any situation in my life and treat it honestly and fairly without having to accept anybody else's dogma being shoved down my throat. And I like that. I love having freedom up here. It's a really beautiful feeling, and I wouldn't trade it for the world. And that's what money's done for me. It's enhanced my my existence on a lot of different levels, and has nothing to do with fast cars, fast women, or any other nonsense. I was watching the golf over the weekend, and they were at the Memorial Tournament in Ohio, and Jack Nicklaus was there giving a little speech. And I wrote down what he said, and because I think golf is very similar to trading. So one sport that draws a lot of parallels to trading. And he said the following. He was talking about Hale Irwin, who was another golfer of his era, who was just receiving a big prize. And he said, Hale Irwin is a great manager of himself and the course. The analogy here is that a golf course is like the market. When you tee up on the first tee, what are you up against? Well, you're up against how are you going to swing the club? What are you thinking in your head? How am I going to play today? It's very internal. The course, how's the wind blowing? How fast are the greens? How thick is the rough? That's the marketplace. That's what you have to deal with. When a professional golfer tees off, he has to deal not only with himself, but the golf course. Every time you turn that machine on, you have to deal with yourself and you have to deal with the market. Very close parallels. Anyway, he said, Hale Irwin's a great manager of himself and the course. And then he just said this to anybody who wanted to hear it. He said, know who you are, know your game, play within yourself. I wrote it down because I said, fuck, this is trading. This is trading. You know what I mean? And he said, believe in yourself. And I've already said that to you guys. Believe in yourself. And another thing he said that I thought was very fascinating, he's talking on the TV. He said, and he's the greatest golfer ever. He's dominated the sport during his era. And he said, I never thought I was the best. I never thought I was the best. He said, if I ever started thinking that way, I was absolutely destined to screw up, take a triple bogey, lose the tournament, not make the cut. So I never thought about being the best. To me, it was always the challenge to try to be the best. I thought that was interesting. I thought I'd pass that on to you guys.
Next are a few snippets from the 2 interviews I've done with.
All right, I'm gonna pause this right here. If you guys want to listen to this it's actually a two-part series. It's called The Best of Trading Psychology. It's a podcast called Chat with Traders. So if you want to come back to this, that's where you will find it. But I want to kind of talk about some of what we just heard, because I think that a lot of gems were dropped, during that podcast. As traders, we are going to have some psych issues, right? We're going to have some uncertainties, and we're just not going to be sure, overall about a trade setup, right? We can have the best intentions, or we can have the best idea, and then the market can do something totally different, or some outside forces can come in and change market conditions. Okay, I think I said a couple of weeks ago that this is the first war that I've ever traded. So I can't tell you, I can't help you as far as making trading decisions during wartime, right? We're all figuring that out, as we go, which is it's not a bad thing, right? That's the importance of journaling. That's the importance of recognizing setups. And that's the importance of consistency. Okay, if you're a consistent trader, then you're going to have a pretty good idea of what works for you and what doesn't work for you. This guy that we just got finished listening to, he dropped some absolute gems. Know yourself, right? You have to know who you are, as a trader. Then you have to know yourself as a person, and then you have to know the game of trading. I think it's interesting. I come from a big family, right? And I think if you talk to my brother, that he'll tell you that, like, we know loss, right? We know how to lose. We grew up very, very poor. Not poor. Not the poor that most of you guys know. Like, we grew up like super duper poor. My mom had 12 kids when it's all said and done. So, I think that kind of painted our background. But, the interesting thing is, my brother's about 15 months older than I am, and he's a cup half empty guy, and I'm a cup half full guy. So it's always interesting to have those two different perspectives from people who grew up in the exact same environment, and me and him are very close, So you have to know who you are as a person. Me and him don't approach things the same way. He approaches things from the cup half empty guy. He's more of a practical guy, and I approach things from the cup half full. I'm more of the he calls it dreamer, but I call it I'm more optimistic, right? So when I look at a situation, I don't look at the situation in the bad outcomes of the situation. I look at the situation for the positives that can come out of the situation. So understanding that, as a trader, I need to hear, I need the devil in my ear, right? I need to hear the negatives, right? That's the benefit of having a trading community. And that's the benefit of surrounding yourself with all things trading. you're not going to get better with your psychology if it's you against you, and the only people you have to vent to is you, right? Because it doesn't work like that. Like you have to have exposure, and then you have to have time to process what you were exposed to. Then you have to have time to formulate a hypothesis, and then you have to test it and all that good stuff. That's not going to happen with you versus you. And you can read these great books. You know, I dropped a few references in the notes, you know, that are great reads. But at the end of the day, you're going to have some market experience and to test the different theories that you're faced with, right? So, you know, I thought it was funny that these guys kind of talk like my brother. You know, if you ask him, he's always like, well, you show me a good loser, I'll show you a loser, right? So I think that that's true in part, but I also believe that you have to be a good loser in this game, because you know, you have to get back on the horse. Like you're going to get some skin knocked off your elbow and your knees, but the next time that trade setup happens, you got to jump in it like your skin is intact, because that could be your runner, right? That could be your meal ticket. So I'm not asking you to enjoy the losses. I'm asking you to tolerate the losses. I'm asking you to process those losses, you know, in kind, right? And the way you do that is by being consistent, by managing your risk. You can't risk 15% one time and 2% the next time and 1% the next time, because the 15% trade might be your loser and you never recover mentally because you got too much skin knocked off. So that's very important as a trader. And it's very important to understand how those losses affect you, right? Trading is a game of probabilities, and it's a game of averages, right? So it's kind of like baseball. You're not going to have a very high batting average sometimes. I mean, you might lose 7 out of 10 trades, but if you have proper risk management, I mean, you'll lose those 7 trades, and the 3 you win, you're still profitable if you're managing risk. So it's ever important that you learn good risk management and that you stick to good risk management. And when you don't, you know, and you go on your little tangent of revenge trading, you're going to take yourself out, because you're revenge trading with these high ass lot sizes because you got beat up on a couple of good setups, and then you destroy your account, you know, by revenge trading. You know, everybody is not going to be 100% disciplined. You know, even the most disciplined traders take bad setups, so they revenge trade every now and then. But if you're revenge trading and managing your risk, you know, hopefully you'll grab a hold of yourself before you take 10 bad trades in a row, right? At least that's the thought process behind it. Let's talk about some of the recent psychological issues that I have dealt with. You know, something as simple as the rate increase, right? We've been anticipating the U.S. to do some rate hikes, and those rate hikes, they happened. You know, they happened here Thursday. The rates went up, and the dollar went up a little bit, but then it fell right back down. And you know, it's not what I anticipated. You know, most of the time when you get a currency pair, their rates hike like the New Zealand dollar, and it runs forever. If you look at the dollar on the Dixie, the dollar is going to drop next week. It's bad for my psychology, because I have an understanding of what's supposed to happen, and now the opposite is going to happen, right? Why? Why the hell is that? Well, if you look at it, since February 7th, when people anticipated the rate hike, the market did nothing but climb, right? So now we got to pay the piper. Now it has to come back. So as long as you have an understanding, if you're gorging on information it will help you out with your understanding, and it'll help you fix your psychology, right? Because when your psychology is damaged, then you don't want to take trades, or then you sit it out, or you get into bad trades. Like, I'm going to buy the dollar, because I know the market went up, right? Or I know that interest rates were increasing. I'm just going to buy the dollar. And now the dollar sells off. You're buying because of interest rates. Now you're blaming me because I told you to buy, during bad interest rate or during rate hikes. And now you're like, man, that dude don't know what he's talking about. So gorge on information, kind of like the guy that paid the woman to sit and watch the plane take off in San Diego, right? Don't get caught up in just because I tell you, or just because you read something, that's the way it's going to work out. All right. Still take your cues, still watch the charts, right? And understand that the fundamentals will generally play out before the technicals. So the buy of the dollar already happened, right? You have a bearish order block, but it bought. This is the fundamentals of them knowing that the dollar was, or the interest rate was going to increase. Now it's going to sell off to give this impulse some relief. It's kind of like the equities markets, the US 30, S&P. That stuff has been selling since December, early January, because people anticipated these rate hikes. They weren't selling just to sell. They were selling because people were taking their profits because they knew that we're going to have rate hikes. So don't let your psychology get beat up because you don't understand the flow, of the market. And if your psychology gets beat up, take a breath, take a day, 2 off or whatever, and then get back on the horse. Trade in the demo for a while, get back on the horse. Just understand that your timing could have been off. The setup, or the fundamentals were there, but your timing of it was a little bit off. Take your setups every time. If you take your setups every time, you're going to win over time, right? Just because you take a setup and it doesn't pan out, okay, it happens. You're going to take some L's in trading. If somebody told you were going to win every trade, they lied. It's not going to happen. So take your setups and take the ones that you take with confidence, right? Those of you who trade with me, if you're on the 5 o'clock call, we take daily order block setups. I'm going to take that setup. It's only one trade I won't take, and that's EG. But that's just for now, during this war. But the other setup, the other order blocks, I'm going to take those, right? And I'm going to take them like clockwork, win, lose, or draw, because that's my setup. And that's the setup that pays me. Weekly order blocks. If I see them, I'm taking them, because that's what pays me. So you have to believe in yourself, and you have to believe in your setups. The way you do that is by coming up with concepts that are true, right? If an order block is created and you follow in that order block, you're going to win the majority of your trades. If not, then you're going to be helter-skelter all over the map. If you're trading with Will, Will sets his stuff up every day, right? And he takes his trades every day, win, lose, or draw. It's not to say that he's going to be 100%, but the setups are comfortable, and he's used to those setups, and he trades the same way every day, win, lose, or draw. Just because he has a bad day doesn't mean he quit trading or he stops believing in his setups. So as a trader, the consistency part is the thing that's going to, at the end of the day, help your psychology, help you get your psychology under control. And your knowledge, right? You have to gain knowledge in order to believe in yourself or believe in your setups. If you're just on this call and you're not doing any personal back testing or personal research, it's not going to be enough. If you're on this call, you might learn over the course of a year, right? Course of 2 years. But if you're on the call and then you go back and do your research, that cuts your learning curve down considerably. And it also will enhance you as a trader, right? A lot of times information is put out on this call, it'll be bits and pieces, just like you saw today on that video. It's not the whole video, but it's bits and pieces. You go back and you research on your own, maybe there'll be other gems that you can pull, out of that conversation. Do I have anybody who has issues on psychology that they want to share? Or gems, things that help them with their psychology? Okay, let's talk about setups. All right, do you guys have setups that you take every time? If you're a swing trader, right? You're going to take your weekly order block setup. Then you're going to take your daily order block setup. Do you guys have setups that you take all the time? Whether it's engulfing candles, whether it's if you're a pattern trader and you take M's or W's, right? Are there setups that you take that are more that your win rate is higher on? Those things are important. If you can identify those and then you only take those, that's going to advance you as a trader. Like I don't trade retail methods at this point, but there are people out there that make a lot more money than me that do trade retail methods. So, it's not up to me to tell you how to trade, right? But what I will tell you is to pay attention to the setups that pay you, right? Because those setups are going to be the ones that carry you through the hard times psychologically, right? I have an easy money strategy. You guys know that. I haven't traded that strategy for 2 weeks, right? I got rolled up on, like 2 weeks ago on an easy money trade that I had to take the other way. Luckily I hedged, but it wasn't worth it. I wasn't getting the payout that I was getting before the war. So I haven't taken the easy money setup. I don't know if any of the other you guys have taken those and how they worked out, but I haven't taken the easy money trade. I just said I'll just go to the order blocks while this war is going on. Okay. Let's talk about trades for this week. If I can find this information sheet. Okay, so on the weekly charts, we'll look at gold and the USD pairs. Now, it's kind of a light news week. You got the GBP. It's going to have some inflation stuff coming out. Germany, they have some PMI information. It's basically the manufacturers will dictate. They'll look at the buying of supplies. They can gauge the strength of the economy. All right, so for gold, bearish order block on the weekly. I'll look for this to retrace up and then sell off, at least back to this level, probably even lower than this level. But this is a bearish order block on gold. So I would short gold, once that retracement is over. Let's look at the AU. All right, you had a bullish order block on your weekly. In fact, all of the USD pairs are going up. The dollar's dropping, so the USD pairs are going up. I think that's true with all of them, with the exception of USD JPY. I didn't see anything on USD JPY, but I know that it's going to have to retrace. But I'm not going to trade USD JPY because it doesn't have there's a bullish order block here on the daily. So maybe it'll go up and touch this order block and come down. But I'm not trading UJ myself, I mean, it's up to you guys. But there are a couple of other setups I think that I like better. The one thing that I do like about this daily order block is it's small, so you can get a bigger lot size probably if you took this trade and you went along with it. Most of the currency pairs are gaining momentum on the JPY. They're going up versus the JPY. We got some good trades last week on that. I think GJ is another long on the daily. On the daily chart, we have Euro CAD for a short. B Chase, you wanna tell the pairs you have?
Yeah, sure. So some of them include the pullback, the weekly pullback strategy. I don't know if
Do,
you
do
want
you
me
want
to
you want to share
exclude.
your screen or you just want
Yeah,
to
I
talk?
can. Yeah, I can. I don't know if you want me to exclude those, but I was looking
You
at.
can listen. You can share your setup.
Okay, so I'll show you what I have. 1 second, and you can judge them from there. So for EJ let me go to the weekly. If we were to do the weekly pullback strategy to the golden zone, I just took it to the 618, and I would break up my TPs according to the fib. So I would do TP 1, 2, 3, and 4 is how I would do it. But it built so much momentum, but I'm looking at where it stopped. It could keep going. But I just saw this and thought, maybe it would play out. So there's that one.
Is there a
You
daily
have-
order block right there? Look at the daily.
Okay.
Probably hit the daily. Yeah.
Yeah, it looks like it hit yep, there's a bearish daily here. So it looks like it somewhat tapped into it to come back down potentially. So
Okay.
yeah, so I thought that was
How many
a good
pips is
one
that?
that might play out. Huh?
How many pips?
I can show you. Oh, it's 215. If it goes to the 618, it'll be 215.
How many to the 50?
To the 50, which would be TP3 for me, is 168. If
Okay.
it went to the TP2 for me would be 122. And if it went to the 236 for me would be 66 for TP1. So what do you think?
I like it.
You like it? Okay, cool. So that's EJ for weekly pullback. And like I said, like you said, here's a daily, the daily order block, and it may, it kind of tapped in. If we want to extend, this is a 25 pip stop loss. If, we could move our stop loss just in case it wants to actually tap in, just so we don't, miss it or whatever. But
The pro
that's what
traders
I
hedge,
have.
yo. Professional traders.
Pardon?
I said pro traders hedge.
Professional trader hedge. Yeah.
Just saying.
Yeah, that's for you advanced people. I would just extend my stop loss a little bit just so that I don't get stopped out, just in case it does want to come up a few more pips. But I did it according to the wick. So I just put the stop loss right at the wick on this weekly candles is where I put it. Sorry for the background noise. It's a Saturday and my kids are doing what they do. I'll go to NJ now for the weekly. Same kind of thing. I just rolled NJ all the way up. Actually, I held it for about 3 days and it hit my final TP, which was here.
You ain't got to brag. You ain't got to brag, Brittany.
My bad. I'm real
I
proud
should
of
have held it
myself
long.
on
I
that
didn't hold
one.
it. I didn't hold it as long. That's good though. That's good. Bro.
Yeah, thank you. I think this shows promise of actually retracing back down because, well, here's the thing. It did disrespect this it did disrespect this weekly bearish order block right here, completely disrespected it, blew right past it and created a new high. So, but you know, I do see this wick right here.
But it's a
right?
daily, it's probably a daily up there.
Yeah, so let's drop down and look at it.
Right
Yep, there it is. There's the daily order block right there. Well, did that tap into it though? Yeah, no, there's one, but it got tapped into already, so I gotta look for another one.
What do
So
you mean
this
got
one
tapped
may
into?
not be as promising as EJ.
I think they all need to retrace. I mean, it can't just go straight up.
You don't think so? Okay.
I
So
think
here's
it's
the
gonna retrace.
here is the it's invalidated. This is an invalid.
But
deal.
there's probably one over. You know, it doesn't matter.
Yeah, I'm thinking so. Here, let me look at where price is, and then I'll see. So price is this yellow line that you guys see on my screen. So that's where price is. So let's find
That's
Smart.
a
that.
smart money.
Yeah, that's not
No,
one
there's
you
a Smart
taught us.
Money Academy order block that's sitting there. That's cool.
Yeah, right. Yeah, because you didn't teach us this one. This one would be more of one, but it's below price.
No,
So
it's sitting at the Smart Money Academy order block.
it is. Okay. Okay. So I think that NJ does show some promise. I think EJ is I think is maybe a stronger likelihood that it'll come down because of where it is. NJ probably too, but you didn't teach us, you know, this type of order block. So, but yeah, I thought that, you know, perhaps that could be one that worked
And
out.
these are your weekly retracement strategy.
Correct. This is weekly retracement.
Did you happen to look at GJ?
I
on the weekly?
did. That's going to be my next one.
All right,
I
let me
also
see
see
it.
GJ for GJ is also on a daily order block too. So I was going to do both. I'm going to get to that one in a minute.
Okay.
But yeah, these would be my TPs 236, 38, and you know, the golden zone. And it's interesting because TP1 on my buy is sitting right at the 618. So, you know, I have some confluence that it could potentially, you know, come all the way, retrace all the way back down here. So that's NJ. Any
And
thoughts on that?
that's about midway through that imbalance too. I like that.
Uh-huh. Right. What do you think?
I like it.
Like it. Okay. So let me go to GJ. So then these are my winners. These are my 6 winners. We'll look at GJ because GJ is a pullback and a daily order block. So I have 2 positions. So I have it for the daily order block, which is here. To go up to the next daily bearish order block, which is here, because this one got disrespected. Because there it is right there. That's the disrespected daily OB. And then it created a bullish one. So that's the next bearish one up here. Now for the pullback,
Go to the weekly.
yeah, I'll show you. So for the pullback, the pullback is sitting right at where the daily OB is to pull back to it, but it's only going to pull back probably to the 236 based on where the daily is sitting.
Oh, that's the daily.
You see? Yes. So this is the daily. That's the daily. And see how it has to come down to tap us in. So that's why I said it'll retrace. I think it'll retrace to the 236 because that's where the daily order block is.
But the 50 is sitting at that. There's a midway at the imbalance.
Oh,
we'll see how that.
Yeah, this one is a little tricky because you have a disrespected daily bearish order block right here, and it created a bullish daily order block where it disrespected the original one. So it's kind of, I don't know. It really could go, I don't know, either way. I guess to be on the safe side, we could just trade just the daily OB.
But it's 85 pips back to the daily.
Pardon?
I think it's like 85 pips back to
right. So if you got the retracement to the 236, it is a decent amount of pips.
80. Okay.
Yeah. But if you go all the way to the body, yes, 86. Mm-hmm. Okay. Yep. So that could go either way, but you know, I was looking at it for both. I'm not sure. I don't know. I mean, GJ is like that. It's just a very volatile pair. What do you think?
I don't know. I mean, I think I I'm comfortable selling this down at least to that order block. I mean, I just sell it until it stops.
Yeah, yeah, exactly. That's
Because
kind of
it's a
what
hedge. It's
how I
a
was looking at
sell to
it too.
buy.
Yeah, it's a good way to hedge. I definitely think I think this is a good hedge because you can ride it down to ride it up.
Mhm.
And either way you'll make money because of
Mhm.
where it's sitting and all that other stuff. So yeah, GJ will GJ is definitely a roller coaster ride for those that like roller coasters. Um, yeah. So that's why I had that one marked up as a weekly and a daily, weekly retracement and daily order block. UJ, I know you said you are not looking at taking. I did mark it up though. So that's the daily bearish and that's the weekly bearish. So that would be, if I were to take it, I make that TP1 and TP2, but the dollar is, it's just, I don't know. I feel like it's due to retrace, but it doesn't seem to be happening.
Well,
So if we're
The
just
Dixie says
trading what we see,
that
huh?
the Dixie says the dollar is going to retrace. I
It
guess
does.
it
Okay.
doesn't mean that the dollar has to get weaker against the yen, I guess, but you know,
Mhm.
that's
And
why.
the Dixie, that's interesting. It is set to retrace because I did the weekly, I put it in for my weekly pullback strategy. I know you guys don't trade it, but I do in my live account, my non-prop firm live account, my personal live account. And it looks like it'll retrace up though to
Well,
the
yeah,
50.
I'm sure it'll retrace up first, but
Right.
yeah.
So that retracement up is where UJ comes in. So you see how on the weekly, I'm in it for a retrace up to the 50 because look where that weekly bearish order block is. Look where the body is at the 50. I was like, oh, that's perfect. So when it comes to UJ, I figured that's what that ride up would potentially look like. Maybe not to the weekly bearish, but at least to the daily
I'm
bearish.
saying if that ride that high, maybe I need to trade it, but
Right, but if
I don't know.
it may not go up there. So if I were to do this conservatively, it's still 341 pips to that next daily bearish order block. And then on the weekly retracement, if I go back to it on the weekly, that is 290 pips. So I mean, it's within the,
What do you,
it's
what do you have
within
for
that
the daily?
range.
What does the daily Dixie look like?
Let's see.
I didn't look at the daily.
That's how the daily looks.
Oh,
So I don't know. That's not an order block you taught.
yeah,
Um,
it's not telling me anything.
yeah. But that's where it is.
It looked like it went up there and closed the imbalance.
Mhm.
Yeah.
Yeah. So the daily is like, but the weekly, in terms of just how you taught us with order blocks, it looks like it could retrace up to that 50 which is where the order block would start to actually then come down. So yeah.
Yeah, I don't have any thoughts on NJ.
On that.
On
Yeah.
UJ.
So
You know, so
yeah, UJ might, I mean, it might be if you're a risky trader.
it doesn't necessarily mean risk. I mean, it does have a bullish order block on it. I'm just, that's
Yeah.
just me. I like the other setups over that one.
I do too. Yeah. Like I said, I did mark it up. Not sure if I'm gonna take it or not because I have 9. I mean, there's so many other opportunities, better opportunities, with I think a bit safer entry exits, whatever. But UJ did have a daily order block, and then the weekly retracement sat at a bearish one. So that's why I looked at it. I have CAD Shuff, which is not it's not a great risk to reward, but I mean, there is a bearish order block here on a daily. And then this is the next bullish order block here, which is where I set my TP. It's only 63 pips. So it's not the greatest, but I mean, it's valid.
That's a sell you have on it?
Yeah, because that's a bearish order block.
But why is that's your entry?
Yeah, because
You don't think it's gonna?
the doji, the body is all the way up here.
I know, but did you fib that candle? I guess it doesn't really matter. Go to the weekly real fast.
Okay.
Okay, go back to the daily.
Mhm.
If you're gonna take that trade, I would wait to see if it goes up first.
Okay.
Like retraces up first.
Yeah. I mean, I could fib it to see. Um, just this
You said
candle,
the wrong
correct?
way.
Oh yeah, I'm supposed to go down. That's right.
B means backwards.
Right. Yeah, I see what you're saying. It may retrace to the, oh look, the 50 is at that tiny body because it's a doji.
The 61.
So,
Yeah.
yeah.
That's
Yeah.
where it's going.
So yeah, I guess you're right. That's my entry would suck if I put it at where price is.
Yeah, and who knows? It might not. It might just open up and go down. I'm just saying, if I were going to take that, I would look at it the retrace first.
Yeah.
I mean, the market is going to open up an hour before we get a chance to play. But
Right. $184. There we go. Fixed it. So yeah, I just put it at the 618 to be on the to be on the safe side. So then let me make that 85. Boom. So yeah, that's where my entry will be now that we've done the fib on that. Ta-da.
now you can stretch your target down a little bit to that.
Mhm. There we go. Yeah, because that's the next yeah. The daily pool is there. Yep. There we go. So that's much better. That's 87 pips now. And I can move my stop loss down as well to the top of that. Oh yeah, there we go. Oh, it's even
you brave if you protect. Yeah.
no, I'll do the weekly monthly bearish order block because yeah, I'm doing too much. 16 pips is a decent stop loss. There we go. So it looks something like that now.
Cool.
Yeah. So that's Cash Chef. ECAD was a
shout.
Yeah, a short. So my entry would be at the bottom of that doji to the daily low. Now the thing about ECAD that I noticed where there aren't any valid order blocks. There's just lows. When I go to the monthly, I noticed that it was, the same thing. I did not notice, not the ones you taught us. I didn't notice any, huh?
There's one right there.
Where?
Go over to the left, right there.
It's invalidated because it got tapped in. Look. Isn't that invalid because it's been tapped into already?
Who cares if it gets tapped? Did it get ran through? It got tapped into, it didn't get ran through.
Oh, I thought if it was tapped into, then it's not valid. Like if it's already been tapped, then you want to look for ones that didn't get.
No, it can get tapped 17 times.
Oh, okay. Well, I take that back. So I didn't know that. I thought that to make a OB valid, it meant that it wasn't tapped into or ran through. So that's my mistake. So yeah, there's one there. So we could move it because this is the daily low here. So if you're saying this is a valid order block, then it's not that far away down, but we could move it. And then call it daily OB or daily bull.
DOB.
DB. I call it D bull, D bear. So that's the daily bullish order block there. And I could move my I could move my TP down there.
That should be TP1 anyway, though.
One, yeah, the low should be TP1. Yep. So this is TP1 at the low. What's the low? 2.6. So that's TP1. And then TP2 is that is the daily bull right there. So yeah, TP1 and TP2. So TP2
300 pips.
331, TP1 is
Right.
204.
I
So
think you might need to do a different. So I would do maybe TP1 a little further up. 300 pips is deep for TP2. We might not even see that all week.
oh yeah, I see what
What's
you're
the
saying.
first?
But I put it at the next daily bullish order block. That's what that is.
I'm with you, but there's two other lows before that, right? Like it's two other places where you could possibly take profit.
Oh yeah. Oh, I see. Okay.
That makes sense.
Yeah. So you wanna, okay, I'll scroll back and see where else we could oh, like here.
Well, I don't know. We're over. Go over there where you were. Where price is
mean?
right now. Where price is
Oh.
right now. Now you see that wick before the wick that you have marked up?
This one.
Yep. How many pips is
Oh.
that in your trade? Yeah, I think you can get
Oh, I see what you're saying. Yeah. From my entry to
that first one is yeah. See that to me that's better. 110.
110. Oh, sure. Okay. So I'll mark that up as TP1 and then TP2 and then, TP3, like you said, might take a while to get down there. So TP1. TP2. And then I guess, yeah, that's good. Because like you said, this might take a while to come down there. But that's a valid place. Oh, yeah. That's ECAD. Any other thoughts? Before I move on?
Oh, this is good. I like it.
Okay. All right, moving on to E-Chef. So, for E-Chef, I had two just in case. So I had the first one to go to the next order block, which is here. And then I have one set up as a sell stop just in case it doesn't retrace because of, how big that it's gotten so much momentum, it may not retrace. So I put that as a potential trade to just catch the sell stop at the 50 because it may not retrace back. It's already, so when I fib this, I fib the move from here to here, as you can see on the daily, because it is on a downtrend. It already retraced to the top of the golden zone at the 618. So I figured because it already retraced, it may not retrace again, if that makes sense, which is why I put a sell stop here. Like I said, it's already retraced.
Hold on, B Chase.
Okay, sure.
Somebody's not.
Okay.
I gotta mute somebody.
Okay.
It's my brother. All right, go ahead.
Okay. No, so I was just explaining my logic for the sell stop. So when I fib this move, it's on a downtrend, right? It retraced to the top of the golden zone already. So I don't know if it will retrace again, even though this is a daily bearish order block. It already retraced based on this move to the 618. So that was my thinking. It may not retrace again. It may just keep going because it retraced and it hit the 50. So I'm like, all right, well, it may keep going. So that's why I said a sell stop here, or, I'm looking to put a sell stop here and then take it to the low. But if not, if it does according to how we usually trade order blocks, then it would retrace.
Yeah, I think it should still probably retrace, I think.
Okay.
But I mean, either way,
Yeah.
I understand it.
Yeah. So that was I just wanted to explain my thinking, just so you don't think I'm just in here just doing my own thing. It's just with the confluence of the fib, that's what was making me think it may not retrace because it did already, but just in case it does, my TP would be to the daily bullish order block, which is here. So that's like, the original, like how we trade daily order blocks. This is my setup. If it doesn't retrace, then this would be my setup, and I would just take it to the low, which is 320 pips. Which your point is, it may not do all of that. So let me go to the next equal low, which is 103. So that's a bit more reasonable, I guess, for a TP.
Well, it gives you a TP at least,
Yeah. Yeah. That's a more reasonable TP there. So this one, if we trade it your way, is 122. And then if it doesn't retrace and I catch a sell stop, it's 103 at that equal low right there. But there is a daily, this is the daily low. So, for people that can hold, if you're not on a prop account, you could hold it to there as a TP, as a final TP. That's E-Chef. Any other thoughts?
Nope.
All right. Moving on to GCAD. We already went over GJ. Going to GCAD. So GCAD.
All right, go ahead. Let me see.
No, you go. You can.
Well, so this is one of the pairs.
Hi, do you mind going to the weekly?
What'd you say?
Go to the weekly for me.
Sure.
The thing that's interesting about this one, if you if you squeeze or go back to the daily and then squeeze it all together.
Okay.
So if you squeeze this together, keep squeezing. All right. I want you to mark up that low to the left.
Oh, where I have my TP already?
Well, no, not way down there.
No, wait. Oh, right here.
Yeah, that low.
Sure.
Shoot a ray at the bottom of that low. Now, if you look at this, to me, this looks like a classic example of a liquidity grab.
Mm-hmm.
How I would trade this, pre-war is I would think this is going to buy up. Can you expand this now so we can see over there where price is? Like we can see the candles. Okay, so a couple of things that make me feel like it has taken out that. There's a ICT teaches that when the daily lows are ran like this, right? When it wicks through those daily lows, we can expect an expansion to the upside. So I wouldn't at all be surprised if this thing runs back up. You see that long red candle?
Yes.
To the upside, up to that area. This could be like a double bottom and it shoots up. That's what I'm thinking. That's my thinking, my thought process on this trade. Now it would still have to come to fruition, but I'm biased for this thing to go up because it ran those daily lows.
Okay, cool. And so because of that, I'm going to take, because again, we have so many other
right.
Really
but
good,
look at the like zoom back in there. Let me see that. Like you have an 8-hour chart on yours?
Yeah, I can pull up the 8-hour.
Because there's a wick, there's probably I don't know, an imbalance or something that needs, see, so it's a bullish. So
Yeah, I see.
I think that,
Bullish.
that it's going to pull back a little bit, and I think it's going to run those highs right through there. And you know, I don't know how many pips we'll get, but I think this will be a pretty good trade to the upside.
Yeah. We just add an 8 hour and then favorite it. Perfect. Yeah. Okay. So I think based on that, and I'm glad that you pointed that out. Just looking at the daily, yeah, it does look, like a bearish OB, but with everything you
Look
said,
like they
I think
stop hunt low, and then they're running the price up.
right. So I think that it's probably wise to just not trade that.
Right, either not trade it or be prepared to trade it to the top side.
Or trade it, right, exactly. But because I'm staying conservative, you taught us about daily OBs. That's just not a trade that I'll take based on what we just discussed. So we have 8, well, 7 to 8 really decent setups, including the weekly retracements that we went over.
Did we talk about Can't Chef? I think we did.
Yeah, we did. We went over
Okay.
that.
Okay.
We went over everything, and GJ was the last one, but remember we went over that first because I went over that when I went over the pullbacks.
Okay, so can we look at US oil?
Sure.
I think Martha went to look at US oil.
I'm already watching it.
Y'all know
on the daily.
I go to the weekly.
Okay.
I ain't trading this trash. So it tapped that order block.
Yeah.
Just like I thought on the other day. So go to the daily.
And it pretty much, I mean, it didn't come all the way down, but look how close it was to tapping that daily bullish order block there too.
Yeah, like if you include the wicks, it tapped it.
Yeah, if you do. Yep, tapped it.
This other one didn't know. It didn't come back and but yeah, I think this is going to the upside, like big time.
Yep. Can I see?
I just want to pay that $8 or $9. Y'all get ready.
Look at the monthly. Look at that wick pointing up. That's liquidity. It has a fill.
Y'all get ready to pay that $8 or $9.
No, sir. I will walk or stay home. Because that's
in the bearish order block now.
You said what?
Well, it tapped into the bearish order block and pulled back.
Well, I know, but that thing's going to the top side, bro.
Look how it disrespected. So this is the monthly bearish order block, and look, it just was like F that.
Yeah, but that's because of the war.
That's true. Yeah, exactly. Because you're right. Because I was in November, and this is January. So, yep. War. That's big news. The last time price was that high was around, let's see, in 2008, which was a recession. Yeah, financial crisis. Yeah, exactly.
Yes, I think you can trade oil to the upside next week. It has to feel that those imbalances up there anyway.
Yeah, look at all that. All of that. This would be considered all imbalance in here, correct?
Well, it depends. I don't know what's in that candle, but it's some imbalance in that wick right there.
Right. And then there's still imbalance up here. I mean, price hasn't been there since 2008. So. Well,
hopefully it won't get that high.
Yeah, I hope not either. But I mean, if it does, hopefully we'll trade.
Yeah, I ain't trading oil, man. Y'all can have that oil.
Yeah, no, I'm staying away from that. Like you call that all.
Yeah, that's Sean. The US all, man.
Yeah. It's quite a bit. Let me just, if I'm missing anything in the chat. Yeah.
I was really shocked to see it come down this far. But, it is what it is.
Yep. Yeah. I put so y'all, I put $60 in my tank. We have a BMW X5 SUV, which is an SUV. And I put 60 in, and I was like, let me see what 60 gets me. It gave me half tank.
See?
He gave us a half, and it takes premium only. That's the other terrible thing about our car, is a premium only gas. So $60 in premium gas gave us a half a tank of gas.
Y'all got that big money, huh?
Huh?
Y'all got that big money. Premium gas.
No, I will. Well, we're claiming it. We're claiming the big money.
E85, baby. E85. Look at that
Lord have
E85.
mercy. So that's oil. Did you want to look at gold?
Yeah, I kind of tested on it. But yeah, you can look at it. It has a bearish weekly order block.
Okay. Oh, it sure does. Do you think it's going to respect it though?
I do. I mean, anytime the dollar, they raise the interest rates. That's why gold is going down.
That's true.
But I don't know how far to go down.
Yeah. Where's the
Hey,
next?
Shay, is Shay on this call? I think I saw.
Here's the next daily OB.
No, it's up higher than that.
Oh.
It's keep going up. Right there.
Okay.
Shay.
Yeah. Yes.
Are you trading this?
Based on your analysis, yes, I was actually marking it on my iPad as we're discussing it.
So okay, yeah, y'all trade. I don't really trade this very often.
You said you was trading it.
I am going to trade it. I am
Okay.
going to trade this down. I'm not. I would rather trade off Shay's analysis than my personal.
No, don't do that.
I trade.
Don't do that.
You know, I guess if you drop down to the daily, sometimes.
You mean the 8 hour? I'm on the daily.
Okay, yeah, drop down to the 8 hour. So dang, yeah. Oh yeah. Okay. If gold pulls back, it makes it a lot easier. You know, if it just takes off and goes down, then I'm always less sure. And with a currency pair, it's easier for me to enter because it doesn't take big chunks out of your account if you're wrong.
So Todd, I was looking on, like, if you measure the weekly and do the weekly retracement and take that to you said like the 23%, that could be the potential entry for the daily OB to tap you in. And then you put your stop loss.
23, but unless you did the fib backwards.
I did it from
No, I'm talking about Shay because she's 23%. Price is already past the 23%.
Because I'm supposed to go top to bottom.
Yeah. Did you do it from the
Hold
top?
on. I didn't do it backwards.
Here, let me move out my thing. So there we go. So the entry it's right below the 382.
Oh, price? Oh.
Yeah, it's right below on the fib. I fibbed it. So this is the weekly fib that I have it. I fibbed it on the weekly, like the candle.
Yeah, on the daily, it goes back.
But so I dropped down to the daily, and based on my entry, it's right below the 382.
But so here's the thing.
I see it on the weekly. I'm sorry.
Sure.
So anytime you have a daily and weekly together, though, like a lot of times it'll run through that daily. You just have to be cognizant, right? Like I wouldn't enter too fast because if it runs through the daily, Prince is going skating, he said, but if it runs through that daily, you'll get caught up, and that's a bad loss.
Wait, but how come? Can you remove it and redraw it for me, please?
Okay. So I'm taking it from the top to the bottom of this wick.
Oh, okay. I took it to the bottom of the candle. That's why.
Yeah.
I didn't take it to the bottom of the wick.
Yeah.
So that's why my 23% wasn't.
Yeah. So if we drop down to the daily, the entry is right in line with the 382.
Okay, that's why.
To go to that
I didn't include the wick.
Right. Yeah.
So why would we include the wick on the bottom but not on the top?
We did. Look, there's no wick at the top.
We just did that one, the red candle.
Yeah, we just did the red candle. Yeah.
Okay.
There was no wick.
No, I mean we didn't draw from the green wick, like the 100.
Oh no.
You know what I mean? Okay.
Yeah, this is just the weekly candle by itself.
I'm
Gotcha.
wondering, go back to the daily, because the 78.6 line is where the weekly order block is. You see what I'm saying? If you look at the weekly,
Right there.
Hey, can you do me a favor? Can you shoot a ray at the top wick of that green,
Sure.
the top wick of the entry?
Sure. Wait, right there.
No, at the top of that wick. Like
Oh, the top.
bottom. I'm
Oh,
sorry,
yeah.
the bottom. I'm
Oh, the
sorry.
bottom. Yeah.
Yeah, I just want to see where it is on the daily.
Okay.
You and your OCD, man.
Listen, okay. Listen, whole numbers. All
right, so it could possibly go here. That
and then
means
retrace.
it would run through
Okay.
that daily order block, and then
Yeah.
But then I was thinking that might be a W. So would it go to? Oh, hold on. That's past the 50%. Okay.
Oh, you're saying you're saying the 50% could potentially be a neckline of a double bottom.
Yeah, like to tap in to go back down.
Right.
But
it might do something like this and then that and then that, take out that low and then go back up.
Huh?
No. Let me see. I was saying, I think it was the 8 hour. Hold on. So like if you drop down to the 8 hour,
yeah,
like you could potentially see a double bottom forming.
right.
Above the 61% is the neckline. So
Yeah.
Todd, you were saying shooting back up to below the 78, which would be if it creates the double bottom and then head back down. I don't know.
Yeah, I mean, every
You see what I'm saying?
every one of these order blocks have bearish, man. Like that's crazy. I don't think I've ever seen this type of influence.
It's gonna be the entry key. That's what I'm trying to figure out.
Exactly.
Yeah, because there's a bearish. You're saying there's a bearish one on the 8 hour.
Yeah, but see how it's two bearish in a row on the 8 hour. It's gonna run through
and
that
a bearish on the weekly.
I know.
Yeah,
It's gonna run through that. See that 8 hour? Go back to the 8 hour. It's gonna run through that first bearish order block. It's gonna run through it and tap into that second one at least. See the second bearish order block
on the daily.
No, right there on the 8 hour. It's two back order blocks.
Oh, that one and this one.
Yeah.
Whew. Yeah, I'm staying out of gold.
No, I mean, look, once it starts selling, I don't have a great entry. You know, like
that's what I'm looking for, the entry.
Yeah, once it starts selling though,
well, Chanel, we'll wait for your
no
posting the trade ideas.
Don't put that pressure on me. Where Gold Rush at?
He's in Singapore.
Oh, Gold Rush, right? Is she on the call?
He's in Singapore.
Or he. And there's another woman that trades gold too. I saw in the Discord.
Demise. Is Demise on the call?
Is she on the call?
No, she's not here.
I mean, yeah. I mean, I'm open to trading gold. I would just like to know entry wise.
Well, I'm definitely not getting in until I see it sell because I don't.
Till you see it sell. Yeah. So you would do a sell stop somewhere.
Yeah, the thing is, it's going to sell all week because it has that weekly order block. So I don't feel rushed in entry. If you look at go to CAD Chef and CAD JPY from last week. Those were two that I kicked myself for because I knew that they were going to buy, but they didn't tap in. I don't believe they didn't tap in on the weekly, so I didn't get into the trade. And well, I guess I missed that tap in. But go to see how far it ran up though? Right up into that bearish order block.
How many pips is that? I just like to see just for kicks. From weekly month.
Down there 300 between those two. Go to CAD now CAD JPY. That's 147.
This one never tapped in.
I know.
It just ran. I mean, it did if you include the wick. If you include
if I had just got into the trade, I could have counted pips all week. but
258. Woo.
so it's over 300. Yeah.
Mhm.
258.
Or over 200.
150. That's 400 pips between those two.
Yeah.
And I had them both listed, but I missed the entry on one and that other one didn't tap in. So I just watched it and it went up all week.
Mhm. And the thing is, if we say, for instance, you felt comfortable suffering drawdown. Oh wow, no, never mind. That's 100 drawdown. That's 100 pip drawdown.
But we could have I could have found an entry.
Mm-hmm.
I just didn't do it.
Mm-hmm. Oh yeah, look, like right here. You could have re-entered where it,
Yeah. Well, I think it'll pull back first, Martha. I mean, if you look at that, you look at the up move, I think it needs to pull back. I think it needs to pull back first before it keeps going up. But yeah, though the CAD, every pair is going up against the JPY.
Mm-hmm. Yep. Let me check the chat. Yeah. All right. Anything else y'all want to look at? I could stop sharing too if you want to take back over to you.
Does anybody have anything else they want to look at? All righty. Well, hey, I appreciate everybody's time. We're still a little bit long, but at least it wasn't 3 hours today. Hopefully everybody will have a successful trading week and you guys enjoy.